Hey, welcome back to my midweek special. What can I tell you that I've seen so far this week? Something major has shifted in global finance. JPMorgan now accepts Bitcoin and Ethereum as real collateral, not theory but balance sheet reality. And Ripple's XRP ledger just powered a regulated $40 million fund in Brazil, proving tokenization has gone mainstream. The walls between crypto and traditional finance aren't falling, they're already gone. The question now is, who's next to follow? Right, so the first story is JPMorgan allows clients to pledge Bitcoin and Ethereum as collateral under its balance sheet. So this is the first major US bank to now formally accept Bitcoin and Ethereum as loan collateral. It connects crypto directly to traditional credit markets, which will set the precedent now for regulated digital asset lending and institutional adoption. It's actually a gateway for Bitcoin and Ethereum to enter into real balance sheets. Because this is very significant, because what we are seeing is real assets, including Bitcoin, really becoming part of the financial estate, if you like. And this good news of even allowing Bitcoin and Ethereum and perhaps some other digital asset tokens to be now formally accepted as collateral in the bank. So whenever you want to issue a loan, you can actually deposit or securitize, if you like, those digital asset holdings that you may have in order to take out a fiat loan. Well, you can do that without actually having to securitize your home, right? Which is very good, because in some ways that would decouple our assets, the physical analog world like real estate, and using our digital asset holdings as collateral instead. This is very, very significant. And this, as I said before, this is now going to set the precedent for other financial institutions to offer the same sort of thing. So the next news that I've seen, which continues on the same theme on embedding digital assets in the financial sector, we have seen that Zodia Custody strengthens bank-grade infrastructure amid Asia's tokenization push. Now, Zodia Custody is actually a bank that's backed by the more stronger financial giants like Standard Chartered and Northern Trust. They've actually are building institutional-grade digital asset custody and governance infrastructure in Asia through this Zodia Custody. It will target banks and regulated institutions in Singapore and Hong Kong to support tokenized real-world assets and secure custody. This means the tokenization and custody rails are being built in major finance hubs outside the US, which is very good news. So the growth story is truly global, not just US-centric. Follow on the similar sort of news, but looking to a different region, in the case of Europe, where we are seeing that BBVA, which is one of the leading banks in Spain, are planning to launch a euro stablecoin in 2026, next year. So according to recent reports, BBVA, which has obtained recently a MiCA license, is working on issuing its own stablecoin backed by fiat for the European market. Now, this move will actually signal a major European bank crossing into digital asset infrastructure via regulated stablecoins and tokenized payment. So as with the other two stories, we're going to be seeing the ripple effect across other financial banks to do the same sort of thing. Otherwise, they're going to lose out. And we're going to be seeing every other week, I would anticipate, yet another financial sector household brand or bank making similar custody announcements to use digital assets as collateral in order to enable their clients to take out a fiat loan rather than securitizing your home. So this is where clearly the wind is blowing, because it's clear that we are entering or have entered into this 21st century digital economy, which is very, very good news. So I have two other stories around Ripple's XRP ledger igniting Brazil's $40 million tokenized fund. So this Brazilian asset manager, which is called VERT, V-E-R-T, has just launched, as I said, this $40 million tokenized fund on the XRP ledger, expanding Ripple's institutional RWA footprint in Latin America. So this is actually a fully registered under the Brazil's CVM securities regime, showing a real regulatory traction, which is very important. It integrates Ripple's on-chain settlement rails with national clearing systems for drawing in local capital, local funds. It confirms XRP Ledger's role as the live financial plumbing, not speculative hype. Ripple now powers compliant tokenized funds across multiple continents. So this is, again, another pivotal RWA coin project. So just to sum up this particular story, this actually confirms yet again that XRP is now formally acting as I just said, that live plumbing infrastructure to bridge TradeFi wealth into the blockchain arena. That's really in a nutshell what XRP is all about. So in effect, it's trying to compete with the SWIFT payment system, right? That's what XRP is trying to do. And they are getting some traction and some successes there. So very, very interesting. And then I'd like to round off with a final article around Hamilton Lane's private credit fund goes on chain via the SEI network. Now, why does this matter? Well, Hamilton Lane is a major private markets manager. So it actually handles under $1 trillion of assets under management. Now, this marks one of the first large-scale institutional private credit vehicles being offered on-chain with real asset backing. It bridges the private credit segment with blockchain, a $2 trillion plus asset class now getting programmable on-chain exposure. This signals real use of RWA tech by institutions, not just treasuries, but credit markets, expanding the investable universe beyond what most crypto coverage focuses on. Now, I made a similar story talking about tokenized credit or tokenized private credit, not to be confused, mind you, with tokenized treasuries. So what is the difference between tokenized treasuries, you may be asking, with tokenized private credit? Well, tokenized treasuries is about tokenizing government-issued bonds on the blockchain in order to raise capital so they can service their debt. Whereas with private credit, it's similar, but it's really aimed for private investors and institutions to get capital through the private credit in order to cover their expenses. So it covers both sides of the coin credit. So it's trying to tokenize the whole credit market on the blockchain. That is what the tokenized private credit is as a use case within real world assets tokenization. So this makes complete sense because we have seen, as covered in previous videos of mine, a lot of news around tokenizing different treasury funds on chain. Now we are starting to hear about how to tokenize private credit funds, again, on the blockchain. Right, so this is very interesting, and this is going to pick up momentum and speed in the foreseeable future. So this is all that I have for you today, and this is all the more reason why I would encourage you to tap into these midweek special videos and my Friday desk reviews, where I actually provide a glimpse as to the real stories, not the fluff or the hype that you may be seeing elsewhere. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.